there as well. Okay. And so here's my presentation. But before I get started, Martin, it looks like we have people jumping on here, which is good to see. Why don't we go ahead and have a little introduction from you? Of course, I'm Aaron Fragnio of People's Capital Group, and I'll be talking tonight about the state of the market and inflation in 2022 and how you can benefit. But Marty and Express Capital teamed up with People's Capital Group on this one. So we both did a joint marketing effort. So we have individuals from Express Capital Financing's network here, and we have individuals from People's Capital Group network here. And I'm sure there's some overlapping as well, since we're both New Jersey real estate focused companies. So good to see everyone jumping on here. But before I get started on my presentation, which is about a 30 to 45-minute presentation, I'm gonna have Marty take over here and talk about how he helps people purchase real estate with Express Capital Financing and how you can reach out to him. So Marty, go ahead.
Great. Thank you so much, Aaron. And first I want to say, folks, you're joining this is a great, it's networking, it's an opportunity, and all this is about growing your real estate and your wealth in real estate. So this is the right time to be doing it, networking with the right people such as Aaron and myself. So my company is Express Capital Financing. We are bridge financing lenders, hard money lenders, or fix and flip lenders. We provide high leverage, low rates, any city, any property. We're not credit sensitive, no financials are required. So for newbies, experienced borrowers looking to do a possible fix and flip in today's economy and world, or if you're looking to do a buy and a hold, which is our debt service program, right now in the 30-year fixed, on a 1 to 4 unit, we're looking somewhere in the 5% range. And again, it's all about the debt service, nothing to do with the global debt service, which is we're not asking for your tax returns, no W-2s, and no income verification. We're also true bridge lenders. If you have a commercial property, a mixed use, multifamily, shopping center, industrial, we provide the bridge financing, typically around 80%, 75, 80% of the purchase, 100% of the CapEx, as long as it doesn't exceed 70% of the after repair value on, again, commercial bridge financing. Again, permanent, like I said, 5%, 30-year fixed on the 1 to 4 units. And then we're also a direct lender on permanent financing as well, if you have any commercial properties. So we are nationwide. We're based out of New York and also New Jersey office. If you have any questions at all about our financing or programs at all, our direct number is 718-285-0806. And the company website is expresscapitalfinancing.com. I will post it in the chat for everybody to see after, and welcome any questions that you have after Aaron's great presentation.
Thanks, Marty. Thank you. And one thing I like about Express Capital Financing is when I was wholesaling properties, I would find a lot of buyers that were getting started, or maybe not just great borrowers, had challenges with their credit or things like that. And I'd bring them to Express Capital Financing, and they'd be able to find them a mortgage generally and get them underwritten. So if you are having trouble qualifying, or you are in the business of selling real estate and you have borrowers that are having trouble qualifying, I do think Express Capital tends to get them funded. So I don't want to bring you a bunch of bad loans, Marty, but that is certainly I've brought a lot of challenging borrowers to you. Let's put it like that. And
yeah, I'm going to add something to the group over here. We're not just a lender here where it's just your second set of eyes. We're going to show you the economics on every deal, where the deal makes sense for you to move forward, your profits, your return on the investment. Because being a second set of eyes as your lender, we want to make sure that you execute safely, you're going to be profitable, and that's what we're about: service, reliability, and communication, and of course those economics on the deal. So that's something that we do for our real estate investors.
Cool. No, thank you. Thanks for putting that in there. And yeah, so I definitely, if you're in the house flipping business or buy and holds or whatever you're doing, I think they're a great option there. And that's why I want to team up with you here tonight. And thanks for putting us out to your network and inviting people to this presentation. And again, Marty's information is in the chat there. So if you have any questions for him, please reach out to Marty, and please connect with him, expresscapitalfinancing.com. And if you're an active investor, that's a great option to get all different types of funds. I know hard money is a 4-letter word, but you guys are good at that, and which is more like bridge. I know bridge financing is kind of a fancier name for that, but for anyone who doesn't know what bridge financing is, essentially it can be also called hard. Oh, hard money is a little different actually than bridge financing, right?
Bridge is like this, it's a short term. It's the bridge to the perm. That's what the
Yeah.
that's where the word came from.
Yeah.
Hard money just means it's like a hard asset. So it's not a hard process. It's just a hard asset, which is the property.
Exactly, exactly. But no, that's good. So you guys have a lot of options in your wheelhouse and a lot of good lenders in your network there. So definitely a great resource and very affordable too. I always found your fees were very competitive and very affordable. So good option there if anyone is an active investor looking to borrow. Great, great. Okay, thank you, Marty. So yeah, any questions, please put them in the chat there. And Marty's information is there as well. And so I'm going to get started here tonight, though. I'm going to talk about the state of the market and inflation in 2022 and how you can benefit, how right now our private investors are benefiting from inflation and not losing value to it. And also kind of just try to put a projection out there, see where the market's going, what's inflation going to do. Of course, we don't really know any of that. We don't know what the future holds, but we can try to assume that inflation will continue for some time now, and what we should be invested in if that's going to be the case. So thanks for coming out tonight. If you have any questions as we go along, please put them in the Q&A or the chat. And I encourage all questions here in the Q&A. I'm going to answer all questions at the end. That's the best way to do it for my side. And I see more people are jumping on, which is great. So keep on joining us here. We're also going to send out a recording of this webinar as well. So that'll be out to you in a few days as well. So I'm Aaron Fragnino with People's Capital Group. Maybe you've known us for years from our networking events. Maybe you're one of our 4,000 members on meetup.com, or one of our thousands of people on our email list here, or maybe one of our 50 plus investors that already invests capital in high demand real estate with People's Capital Group here in North Jersey. But we're a very particular real estate syndication here because we focus on North Jersey. We also manage our own properties in-house with our own in-house management company. So a lot of people like us because we keep tight control of our assets with our own management company. And we're really laser focused on this market here for the last 10 years plus, building our resources and sourcing off-market deals for our investor group. So our mission is to help more people invest in real estate. And we got established in 2013 and helped over 50 people invest over $10 million plus in private capital into professionally managed real estate, where they get to enjoy the benefits of owning real estate, like cash flow and tax depreciation, equity growth, especially in the North Jersey market. We see a lot of equity growth, especially recently. But they don't have to do the heavy lifting behind the scenes, like managing the management company or doing multiple levels of due diligence on a bunch of bad deals to find a good one, or of course, understanding how to reposition an apartment complex and navigate the red tape in North Jersey and refinance the property for top dollar. That's our job here at People's Capital Group, and that's what we focus on doing. So we do the buy, renovate, refinance strategy of apartment buildings in North Jersey. By using our in-house management company, we push that process along nicely. So we focus on people who do not have the time or experience to invest alone, primarily busy professionals, people that have capital to put to work, but don't have the experience or the time to focus on doing all the things we do in real estate. And that's where our best fit is. Right now, we have a little over $20 million in real estate under management. But here's what we're going to talk about tonight. So we're going to do a quick disclaimer, and we're going to go into the state of the market, talk about where the market is right now. We have activity in Ukraine going on, right? No one really knows how that's going to affect the market. We have inflation, which looks like it's kind of here to stay for the time being. Then we're going to talk about how to beat inflation, okay? How to work with inflation, not go against the current, go with the current. That's important when you're investing. You want to be going with the current, not against the current. Go with the markets, not against the markets. Talk about that. We'll go into some case studies as well. We'll focus on 3 different properties that are being really fueled partially by inflation, but also a good reposition management company that we have here, People's Capital Group. So it's kind of like a perfect storm of a good market, low interest rates, high rents, good property value growth, and of course, a nice infrastructure here, People's Capital Group, for our local assets. And then at the end, we'll touch on how to qualify if you feel like this might be a fit for your investment goals. Quick disclaimer, this is not tax advice, legal advice, or investment advice. It's not a solicitation for funds, and it's not an offer to purchase a security. If you do want to learn about the qualification process, if you want to get qualified and review an investment opportunity, then you do have to go to peoplescapitalgroup.com, click the qualify to invest button, fill out the application. We'll reach out to you. We'll schedule a discovery call. We'll get to know each other a little bit better and see if our goals align in the long run. But let's break into this presentation here. So the state of the market, January 2022, this is when we first drafted this presentation, and we're kind of looking forward here now going into 2022. So we recently purchased a car for our property manager, Lena, here, and we purchased a CRV with all the whistles and the bells. And we realized, wow, it's crazy how much it costs us. It was actually about almost $45,000 for a Honda CRV. And I remember them being like $25,000. So it's pretty crazy where the market has gone right now with inflation. Of course, if you go in the grocery store or anything, I just bought my favorite drunken noodle at the Thai restaurant next to my office here for dinner. And as I scarfed it down, and it was like $16. I remember it being $11.50 2 years ago, maybe a year ago. So really crazy how much things have escalated all over the place. Go to the supermarket, go to the restaurant, go to the car dealership. But of course, that's good for real estate as well, right? So our real estate values have boosted in value. And the best part about inflation as well is that it makes our debt less valuable. So I'll break into that a little bit more in this presentation as well. But as our real estate values grow due to inflation and due to good management also, that's kind of like the wind in our sails, wind on our back here, that's helping market values grow. But we also want to make sure that inflation doesn't get too out of control, because right now it's pretty high, and if it goes much higher, it's going to really start to dampen the market rather than help the market overall. It's my theory. Reasons for this, of course, are a number of reasons. We had kind of a snap recession with the coronavirus there a couple of years ago. Everything stopped, and then we had different strands come in and kind of stop the market periodically through that. Hopefully we've wrapped that up. Hopefully we've figured out how to live with the virus and go on with our lives here and not just be running around like, guys without a head here. So I think we are figuring this out. And I think right now the economy has kind of recovered a lot from that, but we're also seeing the Federal Reserve stopping to print as much capital as they've been printing for so many years. They're tapering off as much as they're printing right now. And that's really good to see as well. See, the more dollar bills the Federal Reserve releases into circulation is going to continue to dilute the dollar. So by slowing down that printing of new money, they're able to ideally slow down inflation. That's one thing that's going to play a role there. And then we've seen the expansion really in the popularity growth of cryptocurrency right now. So at this point, we are looking, it's pretty crazy where people are putting their capital. I dabbled with cryptocurrency as well. I made a little money, then I lost more money than I made. So overall, very volatile class to invest in. I thought it was kind of cool at first, and I lost money, and then I don't think it's as cool anymore. And I prefer real estate. So, things like cryptocurrency are getting more and more popular because the value of a dollar is diluted more and more as inflation takes off. So we're going to see things ideally like other types of currencies gain value, and the US dollar ideally lose value or lose trust potentially too, which is not good. So we want to watch out for that. But overall, inflation has caused our market values to grow now and caused our debt to be worth less. So as real estate owners, it's actually been good for us so far. State of the market, beginning of January 2022 here and just going forward. So the Federal Reserve has been printing more money than ever. 40% of US dollars in existence were printed in the last 18 months. That's crazy, right? 40% of US dollars in existence were printed in the last 18 months. So asset classes are increasing dramatically relative to the dollar. And we use the dollar to purchase all of our goods and our services right now in America. So as they print more and more of it and our dollar becomes less and less valuable, we're going to see more people ideally try to put their investment capital into inflation-friendly assets and also look into different types of currencies, as we saw with crypto there. So the cost of goods and services have increased dramatically. Supply chain disruptions have also increased the price of goods. We see the supply chain, the ships sitting in the dock there. Hopefully they cleaned up some of that, but that's still an ongoing challenge. So investors are seeking safe havens for their cash before its purchasing power diminishes further. And that means if your money's sitting in the bank, it's losing value. Even if it's sitting in a bond that's earning 3%, well, if inflation's 7%, then you're actually losing 4% a year. So if your capital is not beating inflation, which is around 6 to 7% right now, your capital is actually losing money if it's sitting in the bank, not earning that. And I don't know any banks that offer 6 to 7% for a savings account. So it should be invested in an asset class that grows with inflation, like real estate or the stock market. We'll break into some of those asset classes in a second. Lack of real estate inventory, low interest rates, and inflation have fueled the real estate market. So we're seeing a lot of growth here, continued growth. Rents continue to grow. Interest rates are still low, although they're starting to tick those rates up. We haven't seen too much of a change there, but we are expecting them to go a little bit higher. Of course, the Fed has kind of been talking very bullish on raising interest rates, but haven't really. It seems their bark is worse than their bite, but we'll see down the road where that goes. So let's talk about the pros and cons of high inflation and how much is too much inflation. Right now, the 6 to 7% is not really quite sustainable. We do want to taper that down to probably a 2 to 3% is a healthy amount of inflation. Generally, the Fed says around 2% is a healthy amount of inflation, and that's generally where inflation lies on a 100-year average. But now, for the inflation around 7%, that's not healthy. That is too much inflation. There were times where it's been even higher than this, and that's been really bad for the market before I was even alive. So there's been times where we've seen a worse than that, but also right now, it's a manageable amount of inflation, but it is still too much inflation because our buying power is getting diminished too quickly, and consumers are losing confidence in the market because of that, and that's not good for anyone. So one of the negative of high inflation is cash in the bank loses value much faster. So our conservative investors are going to be losing value if they're not invested more aggressively in assets beating 7% inflation. And a tip to that is savvy investors who invest outside of savings accounts will prevail. So you want your chips on the table. You want to be invested in real estate or the stock market or some asset classes well diversified that are growing with inflation. You want to be well diversified throughout them. We'll break into that in a little bit. Another positive here of high inflation is cash invested properly can grow faster than usual. So we've seen that with our real estate holdings. Right now, we're achieving our refinance in about 3 years. Our investors are earning a 50 to 60% return on their investment in about a 3-year period. That means they're earning about double what we targeted. So, right now with that inflation on the wind in our sails here, it's really helping our values grow. We also have a good infrastructure, a nice turnover process, and really are very good at repositioning these buildings, which is a huge part of our job. But at the end of the day, the inflation has really helped us achieve our values faster as well. So a tip here is invest in the long term, not for short term, right? Whenever you're investing, it's always good to invest for the long term over short term because, quite frankly, whenever people invest in the short term, it turns out poorly, like day trading or trying to get in and out of assets very quickly. You want to really have a long-term investment strategy over generally a 5, 10, 15-year period, understanding what your investment goal is, understanding the returns you want to make. And you may have assets allocated or capital allocated to a shorter term investment, but in the general scheme of things, we want to focus on long-term investment goals and long-term investment strategies, not drop in the bucket or get rich quick schemes, of course, that don't seem to pan out. A positive here, of course, of high inflation is asset values grow and debt is worth less. So as the value of a dollar becomes worth less, well, my mortgages are all in US dollars. So my mortgages are becoming worth less, which I like. I want my debt to be worth less, and I want my assets to be worth more. So as the assets grow and the debt is worth less, my equity grows, which is the space between what a property is worth and what is owed to the bank. Here's another tip: work with professionals to invest some of your capital. So it's really important whenever you're investing in, especially a high management intensive asset class like real estate, working with professionals, people that know what they're doing, that have a track record of performing on their assets, that you're working with them, whether it's People's Capital Group or another real estate syndicate. If you're not a savvy real estate expert and you haven't repositioned apartment buildings, then you should be investing with experts that know how to do that, or whatever the spaces you want to invest in, mobile homes or whatever it is, warehouses, whatever your preferred piece of real estate is. I like apartment buildings in North Jersey. They're pretty tried and true. Then, have that strategy in place, but work with the right professionals who are executing really well in that space and have a good track record. Here's a negative to high inflation. Everyone pays more for goods and services, right? We're seeing that already. Here's a tip: have a targeted return in mind whenever investing. Our investors generally want to achieve about a 10 to 11% annualized cash on cash return. When taking into account tax benefits, internalized rate of returns tend to be targeted around 15 to 18% or so. So you want to have that targeted return in mind. If your targeted return is, I want to double my investment tomorrow, well, that's not a realistic targeted return. and you're likely to be invested in the wrong assets with that strategy. So you want to have a realistic targeted return, and you want to know how you're going to get there. Generally around a 10 to 12% cash on cash annualized return is pretty good return. That's where you generally find most investors on real estate investments, although historically we've done even better than that. And right now we're achieving phenomenal returns because the market's been strong and our infrastructure's been in place nicely as well. So how to beat inflation? If you can't beat them, join them. So the stock market has achieved record highs. Of course, real estate. Historically, real estate has performed very well in times of inflation. Not only does the value of real estate increase, rent also increases. The cost of debt becomes less over time. Talk about cryptocurrency, again, very high volatility, kind of a new space, pretty interesting to a lot of people. I dipped my toe in the water, then I dipped another toe in the water. I lost that toe. So I have one less toe. But cryptocurrency is that way, it's a high risk, high reward type of investment. So I don't know enough about it to give any type of advice on it. Precious metals, gold, silver, etc. They don't produce any cash flow, so I'm not a huge fan of precious metals, but they can hold their value through recession. Bonds. So bonds actually do not tend to keep up with the rate of inflation where it is right now. Inflation around 6 to 7%. Most bonds produce about a 2 to 3% interest rate. So you're really going to be looking at not keeping up with inflation. You can get a higher risk, higher reward bond that will pay a rate closer to where inflation is. But of course, there could be higher risk with that type of bonds. You want to keep that in mind. Art, high valued art. I've seen people do well. I don't know much about that space, but I know that is a space that tends to grow with inflation as well. Low interest debt. So take advantage of historically low interest rates to own income producing assets or build your business. We are able to get very low interest lines of credit right now for our business, which helps our business grow. And of course, low interest loans and mortgages to buy the real estate, which helps us leverage our investors' capital even better and produce better cash flow from the buildings because we have a lower cost of debt. And finally, ask for a raise, right? The dollar is worth less money now. So if your boss values you the same as they did last year, they should pay you more. So unless you're doing 10% less work or your quality of work is 10% worse, you should be probably getting paid about 10% more right now. So bring it up with your boss. Okay, how do I protect my capital? So here's a suggested allocation of investment capital to beat inflation and mitigate losses. We do feel 25 to 50% of your investment capital should be invested in real estate. That's professionally managed, high demand real estate. I'm not saying go out and buy the two-family down the street and start managing and dealing with tenants and toilets. In fact, small properties don't produce that good of return. In fact, in our experience, we don't really cash flow on anything below 6 units. We don't buy anything less than 6 units. Our sweet spot is really 25 units to 50. So anything bigger than 6 units tends to be a good investment. The bigger, the better, though. So in real estate, by investing with a real estate syndicate and making a smaller investment and getting in a bigger building and essentially hiring those professionals to make sure the project goes according to plan, that's the right way to invest in real estate. And that's a passive investment where you get quarterly cash flow checks, quarterly financials, monthly updates. At least that's how we structure it here at People's Capital Group. And there's tons of real estate syndicates out there. So you want to do your homework and pick the right one that meets your investment goals. But the right way to invest passively in real estate is through a real estate syndicate, in my opinion. Stock market. I think 25 to 50% of your available investment capital should be in the stock market. It's a great method to build wealth, especially in a high inflation time. But we've also seen the stock market become very volatile as there's war raging now in Eastern Europe. We're not really sure how that's going to affect our economy or our freedoms or whatnot. So we'll see. And of course, it hasn't been too good at the stock market. The cost of gas shot up. Now it kind of came down a little bit, but that's, it's strange how that's affecting the stock market. So very volatile space, the stock market is, but it's very liquid. I mean, you can pull your investment capital in and out very quickly. Now, of course, if you're pulling out in a down market, you're going to lose money. If you're pulling out in an up market, that's great, but you're going to have to pay capital gains tax. So real estate is a better tax strategy, in my opinion, because you can write off your cash flow with tax depreciation, where with stocks, if you earn dividends, which are similar to cash flow, you can't write them off with tax depreciation because stocks don't offer tax depreciation. Now, in real estate, you can write off your cash flow with tax depreciation, and we harvest our equity growth through a refinance. So it's really a tax strategy. So we do the buy, renovate, refinance strategy. We harvest our equity growth about 3 to 5 years into the investment as we finish our renovations and renegotiating of leases and increasing the rent roll and improving the property overall and getting it to cash flow as strong as possible. So then we go to refinance the building about 3 to 4 years into the investment, and we harvest that equity growth, and we split up a big lump sum of capital amongst our investors. And they expect about half of their investment back at the refinance. So it's a great way to harvest some equity growth, pay our investors and ourselves, and take advantage of that hard work we've done to boost the value of the property and get more cash flow out of it. But it's a way to also avoid the tax man, because when you complete our cash out refinance, if you don't exit the investment, now our investors do have the option to exit the investment in each cash out refinance, get back their initial investment, keep the funds from the refinance, keep the funds from the cash flow, but now you're exiting the LLC. You're selling your shares in the LLC. So all those earnings from the refinance and the cash flow get taxed as capital gains tax. So to avoid that, you want to stay invested in the LLC, stay invested in the property. We'll likely do another refinance about 3 to 5 years later. Ideally do another refinance about 3 to 5 years after that, and then look into doing a 1031 tax deference about 15 years in the investment as we try to take in as much tax appreciation as we can up front. And then about 15 years in the investment, as we've boosted the value and improved the property value, and ideally inflation's also allowed the property value to go up as well, we're going to look to trade into a bigger property through a 1031 tax deference, defer all taxes, own a bigger property. Then bigger is better in real estate. It produces more cash flow, more tax depreciation, more equity growth. And of course, you defer all taxes. So we are going to refi till we die, as they say, or swap till you drop. It's how the billionaires build their wealth. It's how the millionaires maintain their wealth. And it's how we also help our investors maintain their wealth and avoid paying the tax man, right? Because if you make a 50% return on your investment, let's say you invest $100,000 and you make a $50,000 return on that, and then you decide to exit the investment. Well, that $50,000, if it's taxed at a capital gains tax, is going to get hit for about 25% of that $50,000. So it's really more like a $35,000 gain or somewhere around there. So at the end of the day, you want to focus on not paying taxes, right? Avoiding taxes as best you can legally. So that's what real estate is all about. That's our strategy here with our buy, renovate, refinance structure with our high demand apartment buildings in North Jersey. And it's really a tax strategy at the end of the day, so that this investment doesn't create any additional tax burden. And that's important to understand when investing in real estate, because the tax benefits are just phenomenal. Other investments we suggest are 5% alternative investments such as crypto or precious metals, and then 10 to 15% in savings accounts or liquid accounts. You can look into stable coins, which is a great way to kind of keep your capital liquid, earn a nice strong return on investment similar to a high interest savings account, but it's much better. And then the cash is liquid there, so you can strike on opportunities. Say the next time People's Capital Group sends you a great opportunity in your inbox, you say, oh wait, I want to strike on that, so my cash is available. I have liquid savings available. Of course, you have emergency savings available at all times. This is just additional investment capital we're discussing in this slide. Quick disclaimer here, investment strategy is individual specific. This may not be the right fit for your investment goals. So very broad description here, very broad strategy, and overall a good way to probably diversify in an high inflationary market like we're seeing right now. Okay, let's get into some case studies here. So we're going to talk about 3 different properties. One property is a smaller property, 6 unit in Passaic, New Jersey. We did a cash out refinance on and very successfully reached that cash out sooner than targeted, achieving far better returns than targeted. Another one was a 25 unit we bought and sold in Paulsboro, New Jersey. We'll talk about that and kind of the challenges we had there and why we sold the property as well, and how we hit our targets there also. And then we'll talk about a property we're currently cash flowing on in Paterson, New Jersey, and we're preparing to refinance the building. And we'll go into the details there. That's the 25 unit here to the right in Paterson, New Jersey. So let's focus on our first case study here. This is 196 9th Street in Passaic, New Jersey. We did a cash out refinance that was achieved about 2 years ahead of schedule. So that's really good for our investors here. Our investors were able to achieve about a 50 to 60% return on their investment in about a 3-year period. So really phenomenal returns here. That's not always what is achieved on these investments, but this was a great investment. We bought the property for $450,000, and we put about $50,000 in renovations into it, and it refinanced. It recently appraised for $730,000. So again, we bought it for $450,000. We put $50,000 into it, and it now recently appraised 3 years later for $730,000. So that's allowed us to do a cash out refinance, do a nice large lump sum payout to our investor group who are invested in this property, and they'll earn about 2 times what we targeted. So that's really good for everyone. This property is a 6 2-bedroom units here. We achieved our target ROI plus some. Rent was above target on this. We achieved a higher than targeted rent roll over our 3-year period, and we refinanced 2 years ahead of schedule. Our construction was slightly over budget, so PCG covered the additional cost. See, that's what we do here at People's Capital Group. If we estimate a certain construction budget and then we go over that estimation, over that budget, then that's really our fault. Right now, it may not be our fault. There may be things we can't control, like a natural disaster or some type of damage from an existing tenant as we're moving them out, or a number of different things that can happen. Something we open up the walls we couldn't foresee. So anyway, it might not be our fault, but if construction goes over budget, People's Capital Group brings the additional capital to the table, so we never do a cash call. That's really important. So we're in it to win it with our investors, and we make sure if our budgets aren't on track, then we pay the price. Inflation also assists our value here. It was a wind on our sales, and rental prices keep growing. So we continue to cash flow nicely on this property, and our investor achieved returns faster and greater than targeted on this 6 family. And we're seeing that for a lot of our properties right now, which is really good for everyone. So here's a 25 unit in Paulsboro, New Jersey. We purchased and sold over the last few years, and I wanted to include this in here. It's a little bit of an older property, but it's a good one because it's a good example of learning on a property, and also allocating our business model closer to Berkeley Heights here, and recognizing that even when things don't go exactly according to plan, if you buy real estate at the right price, maintain it well, it can generally be sold for a nice profit in the future. And that's what we found here, even with all the challenges we had with this building. So we bought it in June of 2014, and we sold the building for a nice profit in January of 2017. So we owned it for about 2.5 years. And we achieved higher than targeted returns to our investors. We achieved about 10.5% cash on cash annualized return to our investors. And that was a couple ticks above what we were targeting on that. And this was 25 residential apartments. Now, we had some challenges with this property. We hired a management company that overpromised and underdelivered. We hired then another management company that ended up actually taking money from us. So we had to take them to court. We then developed our own management company, which is now practiced in the art of repositioning mismanaged apartment buildings, right? Taking buildings where rents are below market value, renovations need to be completed. Maybe there's a number of non-cooperative tenants that have learned bad habits, like paying rent late and damaging the property and causing problems with other tenants. So we'll come into a building, we'll figure out how to improve the building, we'll put physical renovations into it, and actually make it a nicer place to live, a nicer place to raise your family, and a place you can feel comfortable living as well, safe and comfortable, smells nice, looks nice. And that's what we focus on at People's Capital Group. And we developed our management company through necessity, because we were hiring other management companies and they were not doing what we needed them to do. Most management companies want to call a plumber when the pipe leaks and collect the rent when it's due. They don't want to necessarily reposition an entire apartment building. There's a ton of moving pieces, in-depth construction, dealing with uncooperative tenants, renegotiating leases for tenants that maybe aren't used to having a lease or even used to paying rent. Working out cash for keys with tenants that we want an amicable exit with, moving to eviction court with tenants that won't cooperate. So a lot of times we buy these buildings, and depending on the building, there can be a lot of moving pieces involved. In this case, it was pretty mismanaged. We did have to come in and manage the building much better. We fired 2 management companies through that process, developed our own, and now through the years developed a really good repositioning company. I don't even call it a management company because I've dealt with management companies. They don't do what we do. We reposition these buildings, we improve them, renovate them, and get them to be performing assets where there was no performing asset. So in this case, we ran into those headwinds with the challenging of management companies, non-cooperative management companies, and we were still able to sell the property for a nice profit and achieve higher than targeted returns to investors. The market helped us for sure. The market grew, but we did our job right. And we developed the right management company. And it just goes to show with the challenges you have, if you buy at the right price, right, make your money when you buy, as they say in real estate, and you sell at the right time at the right price, and you maintain the asset along the way. Real estate can be very forgiving, and it could be a very good investment overall through a longer length of time. Now, flipping houses, I can't say the same. I found flipping houses to be very challenging. I've done over 50 fix and flips, and I found that fix and flips is actually one of the hardest ways to make money in real estate. But this presentation isn't so much about that. If you want to learn more about those experiences, you can check out our podcast at peoplescapitalgroup.com, and we talk all about that there. So here's the final case study here. This is 105 Marion Street in Paterson, New Jersey, and this is performing as targeted. This is a renovated 25 unit here. This building has a full parking lot, which we purchased this in October of 2020. It's more of a turnkey property. It was cash flowing from when we bought it. Rents were about 15% below market value. So it's a little bit of a lighter lift than, say, the building we just bought in December in Rahway, New Jersey, which is a 27 unit property. We're putting $350,000 into, and rents are like 30% below market value. That's a very heavy lift, larger renovation, more negotiating leases, more working out cash for keys with tenants, or moving to eviction court with tenants that are non-cooperative. In this case, with this property, it was a bit of a lighter lift. It was more of a turnkey property, but rents were still 15% below market value. We still have tenants that are moving out, and we're renovating the units and releasing them for actually higher than targeted. And we're finding that we're able to rent the units for higher than targeted and also faster than targeted. But we are finding that we had a bit more tenants move out than we had assumed, but that's okay because that gives us a chance to renovate the units and make them better units that rent for a higher price. A lot of times when we buy a property, we come in and say, hey, listen, we're a professional management company. We're a professional real estate syndicate. Here's our welcome package. Here's our property manager. Here's the process when there's an issue. If something breaks, you can go right online and file a work request, and we'll send a contractor over. You can pay your rent online. You can pay your rent at 7-Eleven or Wells Fargo. So we make it easy to pay rent. We make it easy to contact us, put in work requests, and contact our property manager when there's an issue. And our first goal is to make a happy tenant, because we know a happy tenant equals a happy investor. So that's always our goal here. And this property has achieved a positive cash flow to investors within the first full quarter of ownership, which is hard to do, produce cash flow that quickly from a property, but we were able to achieve that here. And our targeted cash flow to investors has been achieved, and our value for the property is ahead of target due to low inflation assumptions when we first underwrote the building. Right. So one of the reasons our buildings are performing so much better than we initially targeted right now is because when we first underwrote these buildings to buy them, we assumed inflation would be moving at a 2% rate. Okay. Because if you look back historically, inflation's been around 2% over the last 100 years on average. So we assume the last 100 years is a pretty good measuring stick. So we say, okay, inflation is going to move at 2% a year. So we assume some natural market growth of 2% a year. Now we were way off. The market's grown around 6 to 8% a year, sometimes more in different markets. So because of our conservative underwriting and our conservative assumptions off the bat, we were able to really overperform on these assets, because initially we're not assuming the market's going to keep doing great things. In fact, we assume the market stops growing, and we also assume that our costs increase at 50 cents for every dollar we increase rent, because we know that taxes, insurance, and other costs go up over time as well. So we have a lot of conservative assumptions in our initial due diligence, and that allows us to put pretty conservative projections on our offer memorandums, and we often overachieve them. We're generally achieving 10 to 50% greater than targeted, depending on the asset right now. So anyway, there's a great investment here. We're performing as targeted, and it was a bit of a less of a heavy lift than say the 27 unit we're renovating right now in Rahway, New Jersey. But that just goes to show, some properties are like this, others are like the heavier lift. At the end of the day, between the cash flow and the cash out refinance, investors would expect to make about the same return on investment that they're making in this building or a building with a ton of renovation. But the bottom line is we're always looking for mismanaged apartment buildings with rents below market value here in North Jersey, generally within about 10 minutes to a train station or a downtown area is our main goal. Generally within a couple blocks of that is even better. And that's what we focus on with this property and future properties as well. So here's the founders of People's Capital Group. That's me to the right, Aaron Fragnito. I'm a senior managing member here and co-founder of People's Capital Group. I focus on investor relations, marketing, and branding. Maybe you've seen one of our many podcasts. You can check that out on all the major podcast platforms and our website, peoplescapitalgroup.com. I also do webinars multiple times a month. In 2 weeks, I'm doing a webinar called How to Self-Direct Your IRA into Real Estate. I do that about 8 times a year. And that's a really cool opportunity where if you have a solo 401k or an IRA, you can self-direct that into real estate by using an IRA custodian. And that webinar in 2 weeks is going to talk all about that. So you can go to peoplescapitalgroup.com. You can sign up for that webinar. I also do other webinars. This one obviously about inflation here. We've also do one about quarterly updates every quarter. We just did that on our current projects going on. We give updates on them. And I do other topics as well that are with the times as well. I'm probably going to present something on Ukraine and what's going on in Eastern Europe here in the next couple months as well. So we'll have a new webinar coming out about that. We try to bring very relative topics to the table. We also, Seth Martinez here to the right. He is co-founder of People's Capital Group as well, and another managing member. He focuses on operations side of the business. He's managing the management company, creating the first levels of due diligence, making sure our buildings are performing and that the next building we're buying is a good asset as well. I also complete due diligence on the buildings, but together we've completed over 250 transactions, totaling over $40 million in real estate. Currently about a $21 million portfolio. We help a little over 50 people invest over $10 million in real estate right now. And we really focus on treating our investors right and treating our tenants right. It all starts with courtesy and having a lot of communication as well. Our investors say they learn a lot from our investment opportunities as well. So we really enjoy that. But I have a passive cash flow podcast. I put that podcast out every week. So check that out. And we have a blog as well on our website that comes out every week also. So a ton of content. It's all peoplescapitalgroup.com. Let's talk about how we work with passive investors and what the responsibilities look like. What would it look like if someone were to invest with People's Capital Group? Well, the responsibilities first on our side are to locate, negotiate, and perform due diligence on a real estate opportunity. We'll sometimes look at hundreds of bad opportunities to find one good opportunity. It's very hard to find a good deal right now. In fact, when we do, it usually funds very quickly. So it's important that you do get qualified and get on our investor list if you feel like what we do is a fit for your investment goals, because quite frankly, we have more investors than opportunities. So we want to make sure that everyone has a chance to get in on the opportunities when we find them. Once we find a good opportunity and complete our due diligence, we're going to obtain a mortgage on it and generally personally guarantee that so our investors don't have to. And we'll manage the asset in its entirety as well with our in-house management company, taking a mismanaged building into a performing asset, getting as much cash flow as possible to our private investor group, and then completing a cash out refinance over about a 3 to 5 year period. But we perform that value add strategy through the entirety of the investment to realize the targeted ROI before the refinance and afterwards as well. We'll continue to refinance and continue to manage the property from A to Z and offer monthly updates, quarterly financials, and cash out refinances along the way to our private investor group. Responsibilities of our investment partners. So first step is to qualify. You have to be an accredited or sophisticated investor. An accredited investor is someone that has a net worth of $1 million, not including their primary residence, or has an income of $200,000 individually or $300,000 as their household income. If you don't quite make that criteria just yet, you may qualify as a sophisticated investor. That's an individual who understands the investment opportunity, meaning you've reviewed the investment opportunity first by filling out the qualification form and moving to the next step. You have ample savings, the minimum investment amount of $30,000 plus ample income as well. and some investment experience. Maybe you've bought a home before, owned an income property before, so you understand the asset class and the investment opportunity. So we don't only work with millionaires. We also work with sophisticated investors who are essentially investors kind of getting started, working to become accredited investors who aren't quite there yet. Most real estate syndicates do two things. They don't have their own in-house management company, and they don't work with sophisticated investors. They only work with accredited investors, meaning they're leaving out in the cold a whole group of people that are trying to learn how to invest in real estate the right way and make good returns so they can become accredited. And those are the individuals we focus on working with. We also work with accredited investors as well, who have some 7 figures with us, who have been investing with us for years. So we really pride ourselves on working with the whole spectrum, multimillionaires and investors getting started as sophisticated investors also. After filling out the qualification form, you must be selected to invest and respond with the executed documents within a time frame allocated, and procure the approved funds to the title company prior to closing. And the investor does not personally guarantee the mortgage or take part in the management day to day. So how do PCG private investors benefit? Well, first of all, we beat inflation with real estate investments. As I was explaining earlier in this presentation, we really have been working well with inflation right now. We've been able to beat our targeted returns to investors by a lot. And we've been executing very well on the construction end as well, on the management end also. So good on all fronts here. Also, no experience in real estate necessary to invest passively, right? That's why you're hiring professionals to invest with. That's why you invest in a real estate syndicate, because you're taking our expertise, our years and years of experience, our 250 plus transactions we've done, our management company in place, and you're essentially hiring us to invest with you in real estate and make sure that the investment goes well. But we're not just a management company managing your asset. We're in the asset with you. It's our asset together. So we want to make sure it's performing. We have an incentive to make sure it performs, not just to collect a management fee, of course, which is a management company's incentive. And diversification of investment portfolio. We do find that a lot of people that invest with us are originally 100% invested in the stock market, which is not true diversification. Now, sure, there are advisors out there that say, well, you can be diversified within the stock market. And sure, you can. But true diversification, in my opinion, is actually taking capital out of the stock market and investing in tried and true, professionally managed, high demand real estate through a real estate syndicate. Maybe People's Capital Group, maybe another one, but the bottom line is diversifying into a real estate syndicate, owning professionally managed real estate in a good market is key to diversification and getting those tax benefits too. Expertise and guidance. So of course, that's what we focus on here, People's Capital Group, and giving courtesy to our investors and our tenants. Ownership in high demand real estate. North Jersey is a very high demand market. We source great deals here. We're laser focused on the North Jersey market. And a lot of our investors are local as well. And they really enjoy investing in Newark and Patterson and Morristown and Jersey City and Hudson County, Essex, Union County. So they know these areas. Maybe they grew up around them and they like making a difference in these inner cities areas as well. It's really nice to see. Of course, best practices for contracting and sales here, and leasing for top dollar as well. Professionals that do the work for you, and options for self-directed IRAs or solo 401ks. We are friendly to those options. So if you have an IRA or a 401k and you want to learn more about how to self-direct that into real estate, you can get in touch with us and we'll help guide you in that process and even help you select the right IRA custodian, which we are not an IRA custodian. We're a real estate syndicate, but you do need to work with an IRA custodian to self-direct your IRA into real estate. We can help guide you through that process. You can learn a lot about that at peoplescapitalgroup.com. So let's wrap up the process to proceed here. Then I'll answer any questions. So step one, fill out a qualification form. That's done an application form at our website there, peoplescapitalgroup.com. You click the button that says Qualified Invest. You'll fill out an application form. Then we're going to contact you and complete a discovery call and send you a more formal qualification form through DocuSign. Once we review the qualification form to make sure this individual is qualified to invest, then we can move them to the qualified investor list and actually send them an opportunity as it becomes available. Again, we have more investors generally than opportunities. So when we do find an opportunity, it tends to get funded pretty quickly. That doesn't mean you shouldn't apply or try to get on our investor list. we encourage everyone to try to qualify for our investor list, because generally, even if we have only, say, 15 spots for an investor, but we have 60 qualified people, well, honestly, not all of them are going to invest. Maybe it's not the right time. Maybe it's not the right deal, right? There's a million reasons. Maybe they just invested in an opportunity and they don't have the cash right now. So, of course, just because we have so many investors doesn't mean the opportunities aren't available. It just means they get filled up very quickly. So you do want to fill out the qualification form. You do want to get qualified and get on our list so you can review those opportunities, because otherwise we can't send those opportunities out. Once the opportunity is reviewed, you would sign electronically through DocuSign, the offering memorandum, and private placement memorandum. We make it very easy to get signed up with us. Once you're qualified, it's all done through DocuSign. The qualification form is also done through DocuSign. So we make it easy, no printing, no sending of documents, no notaries, it's straightforward electronic documents. Of course, step 5, wire the approved funds to take ownership in the LLC that owns the property. We create a new LLC for every property. We create a new fund for every property, and that allows us to offer LLC ownership to those investors partaking in the opportunity. And of course, once we close on the property, you'll enjoy positive cash flow checks once we're creating positive cash flow from the property. Monthly updates that are really in depth. And a lot of people tell me, hey, I learned a lot from your updates and on how to manage my buildings and how to manage real estate in general. And I've learned so much from it. In fact, I've managed my own real estate better now, and I make better returns with your investment, but I've learned how to manage my own investments better. So I do get that feedback a lot from active investors who are trying out passively investing with People's Capital Group. And every quarter, we send out financials as well. We work with a whole third-party bookkeeping and accounting firm. They take care of all our tax needs, all our investors' tax needs for the properties they're invested in, our bookkeeping as well. So a whole third party covers all the bookkeeping and tax prep. Not only is that a nice separation of powers, but it also means that we get our K-1 tax forms out quickly at the end of the year. Because remember, our investors own part of the property. They don't have to do the work. They don't have to sign for the mortgage. They don't have to do all the heavy lifting behind the scenes, but they are passive owners, non-voting owners of the LLC that owns the property. So they get a K-1 tax form at the end of the year that shows their tax depreciation, their profit or loss, and of course, quarterly financials as well. Every quarter, a balance sheet, a profit and loss sheet, and a distribution sheet showing exactly what the investment is making. So that's it for me tonight. You do want to go to peoplescapitalgroup.com to learn more about how to invest with us and how to start your investment journey. If you don't own any real estate yet and you want to diversify into real estate, a real estate syndication is one of the safest avenues to get started doing that. And we specialize in helping people diversify out of the stock market, non-accredited and accredited investors diversify into real estate, tried and true assets here in the North Jersey market. So if you're not invested in real estate yet, go to peoplescapitalgroup.com, fill out our application form there, and you can look forward to getting a call from us to set up that first discovery call. Now, in this discovery call, we can talk about your investment goals, see if they align with our investment goals, and answer your questions in depth as well. Most of the time, I'll be on the discovery call, so you have a chance to connect with me, Aaron Fragnito, one of the managing members of People's Capital Group, and answer your questions about what we do here and see if it's a fit for us to work together to reach your investment goals. If you already own real estate and you're a little tired of managing the assets or managing the management company, you want to see what it's like to have someone do all the work for you and just simply get monthly updates and quarterly cash flow checks and quarterly financials, and tax time is not a headache, then check out peoplescapitalgroup.com to learn more about passive investing, because that is what we focus on. That's allowed me to go from an active investor to a passive investor. That means that instead of owning 1 or 2 buildings and dealing with tenants and toilets, I'm owning about 25 buildings, and I don't deal with tenants and toilets because I have a management company in place. So of course I'm an operator in real estate. I'm a full-time active investor, but through the passive setup, active investors can experience passive investing quite easily. And the feedback we get is phenomenal from active investors saying, hey, you know what? I made more with your investments and I don't have to do the work. And I learned from your updates. So it can be a real win-win for everyone. And you want to make sure whoever you choose to work with has a proven track record. The majority of their investors reinvest over time, and that their investment strategy fits your investment strategy. So with our buy, renovate, refinance strategy here, it's a tax strategy, a way to avoid paying a bunch of money to the IRS, keep more money in your pocket, And with the high demand market we focus on in our in-house management company, we're getting the properties to perform at phenomenal rates, sometimes 2 times our targeted returns. Of course, we don't want to overpromise and underdeliver, but even achieving that 10 to 12% annualized cash on cash return is a strong, solid return for our investors year in and year out. So that's it for me here at People's Capital Group. I'm Aaron Fragnito, and please go to peoplescapitalgroup.com and learn more and check out our content there. It doesn't look like we have any questions tonight, but we did have a good turnout, which is good to see. Marty's information is on the chat. So if you want to reach out to Marty, it's expresscapitalfinancing.com. Okay, that's Marty Sheriff. If you're an active investor looking for loans, if you're looking to invest passively and let People's Capital Group do the work while earning the returns and the benefits of real estate, go to peoplescapitalgroup.com and fill in an application form. Thanks a lot for attending tonight. Hope you learned a thing or two about inflation, the market where we're at, how People's Capital Group helps people invest in real estate. And I encourage you to attend our future webinars as well. Have a good night.